please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back. Well, TCS is the big story of the day, the first $100 billion market cap company in our markets. But let's move on and talk about some other companies as well. Some cheer for spirits companies today. The liquor industry actually saw a revival in demand in the January to March quarter, particularly for premium brands. Let's find out more. Shekhar Ramamurthy, the MD of United Breweries, joins us to talk about that. Shekhar, good morning and thanks for joining in. Tell us a little bit about volume growth. Your company, of course, has been doing much better than the industry for a while. But are you seeing a major revival in demand, and what kind of average volume growth do you think the company could eke out over the next couple of quarters? Shekhar, is my voice reaching you? I don't think he can hear me, so let me just try and touch base with him once again. In the meantime, we can also just take a quick look at what's been happening in the market. We've told you about TCS, which is the big talking point of the day. But in the broader markets, NIIT and NIIT Tech are the ones that are really surging now. So both those stocks up anywhere between 9 to 10% and Mindtree is the other one that's chipping in up about 3.5 to 4%. So clearly, it's an IT day.
Oh yes, absolutely. And actually, the cheer spread everywhere. It's not just with IT. Also giving a lot of help is the oil marketing companies. Today, the oil and gas stocks are firing in the positive as well. So that as well is helping the index. So the banks, therefore, are not having too much of negativity. But we have Shekhar with us now.
Yes, we do. So, Shekhar, good morning. I was asking you about the volume growth estimates and what the projections are. Has there been a big revival in demand?
Good morning.
Hi.
Well, this is the first time we are speaking this financial year. So, yeah, as we've been saying over the last few months, there is a volume revival. And we have seen this coming in the last few months. As we have held, the industry volume should grow single digit, I think between 5 and 8% over the next 12 months. Of course, the volume growth is not uniform. We again have a market like West Bengal, where on the back of a steep price increase, if you recall, government put up duties very high. The industry is actually in steep decline. We are seeing declines of 30–40%, and we have to wait and watch how that unfolds. Similarly, Maharashtra, after the duty hike, which happened around October, November last year, the industry has still not stabilized. It's still in the negative. But there are pockets of growth. Most of North is growing, Karnataka is showing growth, Telangana is showing a growth. So overall, we hope that for this year, the industry will grow mid to high single digit, and that's a positive.
Okay. Good morning, Shekhar. Good to have you with us. Well, now tell us what your growth plans are. Flavored beer as well as the Kingfisher variants. What are the plans over there? Which markets?
Well, of course, we will definitely plan to grow, and it's always been our objective to grow ahead of the market. And we, as you know, have introduced a few new brands over the last couple of years. Of course, our growth engine will continue to be our flagship Kingfisher and Kingfisher Strong. But we are seeing very strong double-digit growths in our super premium brands, Kingfisher Ultra, Heineken, Ultra Max. Our Kingfisher Storm, which we launched about June last year, is doing exceedingly well. It's still in only a limited markets, and over the next 6 to 8 months, we'll roll it out to more markets. As I have said earlier, we have plans to launch our own craft and variety, hopefully by the end of this year. And as I've also said, we have plans to enter the non-alcoholic beverage space. And again, we hope to be in the market by end of the year. So all in all, we have some very, very ambitious growth plans, and we hope to execute them.
Okay, I wanted to ask you a little bit also about that issue that you face in the state of Maharashtra. There was some delay in terms of clarity on revised pricing, etc. Has all of that been sorted out, and what would the estimates be going ahead?
Yeah, that got sorted out around December. So that was a couple of months where there was a lack of clarity on how the new tax structure would unfold. However, post that, prices did go up, though the duty increase was moderated, but it was still quite a sharp increase. So what we're seeing now is that the market has not responded very positively to the price increase, despite the fact, as you know, the Maharashtra government has relaxed the rule of which outlets can open post the highway ban, etc. So despite all that, whilst the number of outlets will soon go back to almost what they were before the highway ban, but the steep price increase of beer has been a dampener. But again, we are hopeful. We are hopeful that this is short term, and when people get used to the new price levels, volumes will come back to what they were.
Okay, if you can, you gave us an overall view of all the new brands and new products that are going to launch, but can you go one by one? For instance, craft beer, what is the expected pricing, revenues? Generally, what's the plan? Some numbers.
I can't tell you. I can't tell you all that just now.
Okay.
Maybe we can talk about it closer to the time when we introduce.
Okay. Okay. How do you see all these various brands?
That we have plans.
Okay. Tell us how much you can reveal then. How much might it improve your overall revenues? Say, what is the FY19 plan, both volume and revenues?
Again, we don't put out forward-looking estimates in our business, in our company. However, let me put it in perspective. The fact that we will launch craft and variety is very important to our business. And as you know, we've been saying that that space has got, in terms of mind space, been dominated by others and not by us. And that's something we'd like to rectify. However, it is still a very small part of the overall business. And it's niche, it's small, albeit growing quite rapidly, but it's not going to have a significant impact on our revenue or bottom line in the short term. Similarly, the launch of non-alcoholic beers that we will definitely do, because we see a huge potential in the long term for us to be in that space. But in the short term, these new additions will not have an impact on our revenue and profit. Of course, they will change our portfolio profile. It will change the way we hope consumers look at us as a business. But these are all plays for the future. And it's important for a company of our size and our spread to not only be here for today, but also create the platform for growth in the future. So all these new additions are our platforms for growth for the future.
Okay, Shekhar, we'll leave it at that. Thanks so much for joining us and giving us your view. So that's quite an optimistic view coming in on the brewery space. But for now, the stock that's taking everyone's breath away is TCS, more than 4% higher at the moment, and volumes are picking up. So prospects looking pretty bright there.
Well, equity markets in a fine spot, and in the bank Nifty has overcome the blues of high bond yields. Manisha Gupta joins us now to tell us what's happening in the commodity space. Green there too, Manisha?
Oh, well, absolutely. Almost everything, especially the industrial commodities, are trading quite at the positive, starting with the crude oil prices. And we are back in positive. $74 per barrel is holding for the Brent prices. And it has gained nearly 20% from the Feb lows. So we are in a bullish territory. And almost nobody is talking about a profit taking from these kind of levels. We are talking about higher highs. And even as the US rig count has seen an increase, it really is about the Asian demand, about the decline in supplies in the global inventories from Venezuela, etc. And that clearly is taking the prices on the higher side. 0.25% up on your screens for the MCX prices also. The only pressure that could come really is from the US rig count, which has increased for a third straight week. And that is what has led to a flat opening in the Asian markets right now. The gold and silver prices also have gone in for some profit taking, and this is because of the strength in US dollar, which is trading at a 2-week lows. So after almost hitting a 6-month highs in the previous week that we saw come in for both of those metals, there is some profit taking coming in your screens. 0.5% down for silver, but still holding 40,000 rupees per kg in the Indian markets. it really is the metal space which has seen more follow-through buying after what we have seen in last couple of weeks. It has been about the concerns on supplies after US put sanctions on many of those Russian companies. And even as aluminum prices have gained 25% in the first half of April, we are looking at yet another 1% gains coming in for that market right now. You also have to look at the steel prices, which are trading at a 5-month highs, up 3% in Shanghai right now. So all the steel ingredients like nickel and zinc have continued to do better as well. And it is about the strong data that we have seen come in from China and US about construction that continues to keep the copper prices as well at around 1-month highs. Today is going to be important because you have manufacturing data coming in from France, Germany, Europe, US, etc. And that would give you further direction coming in for many of those metals. Trading strategies, and we have them from Anand Rathi. They have a buy call continuing in case of silver. 40,500 is their target on that one. Not so bullish in case of metals, especially lead, where they have a sell with targets at 154. But in energy as well, they have buy calls continuing. Natural gas is their pick today with 184 as targets.
Okay, Manisha, thanks a lot for that. But the big story of the moment, TCS has created history by becoming the first Indian company to hit $100 billion in market cap. Here's more from the man himself who spearheaded this IT giant in its formative years and now heads the group as the Tata Sons chairman. Here out N. Chandrasekharan.
The digital transformation is going to be the biggest opportunity, primarily because there is going to be more technology in every industry, whether it's a B2B industry or a B2C industry. So we have been making these commentaries and also parallelly investing and building capabilities and being ready for this adoption cycle. And this adoption cycle is gaining momentum. And I mean, if I may say so, I think it's the start of the next big run for TCS.